Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, January 23rd. Interesting market this past week. Dow made new highs, but for most of the week, it was essentially a large cap story. We had a big pullback in small cap stocks. Russell 2000 was down 4%, I believe, at one point this week. And, that is not uncommon in January. The first couple of weeks in January see the small caps explode, and then later in January into February, there's typically weakness. So, what we've been seeing in the market is not really much different than what we typically see in January. We have a lot of people who have gone high cash, including ourselves, but they've gone high cash with an eye towards a big sell-off in the market and are either high cash or going short. And you've been seeing a lot of, the top is in calls. If you've been watching message boards or being in some of the chat rooms or on Twitter, that's essentially the common theme you've been seeing out there. And, I've got a strategy, or not a strategy, a view on the market. Over the last 10 years, the market rarely does what the most think it's going to do. And right now, the most think it's going to sell off. And here we are with the Dow. Actually, let's just scoot over to the daily chart. Here we are with the Dow. We're within a day's rally of 12,000. Really hard to imagine us not getting at least one 12K print before we get a retrace. Now, I'm not saying this market is not overbought. It is overbought. And a retrace could come at any time. But what we are doing right now is playing the trend. You've got a lot of people out there. The same thing happened back in 2008, 2009. They're playing the this shouldn't happen or this should happen game versus following the actual trend that's in the market. And the trend continues to be up. We've got that thing called the Bernanke put. The Fed is pumping crap loads of liquidity into the market every single week, $5 to $10 billion in extra liquidity going into the market every week. And we're seeing companies starting to get business pick up. I'm thinking we're going to start to see the economy really heat up over the next few months, and then that's only going to add to the earnings reports. I mean, companies are posting monster earnings right now for the most part, and that's with unemployment at 10%. Imagine what's going to happen in a few months' time when we start to see that unemployment rate come down and jobs get created and those people have extra money to spend. It's going to end up being a snowball effect, and sometime in the next year we're going to see GDP pushing 5%. And talk of, overheating. Hard to imagine that happening now, but, that's probably what's going to happen down the road. Looking at the Dow 15-minute chart, you recall I mentioned that we had an inverse head and shoulders formation on the 15-minute chart, and that was typically a bullish event. And what we ended up getting off that, the height of the head and shoulders, which is one way to, sort of gauge what we're looking at for upside, was about 150 points, and we ended up getting a 125-point move off that inverse head and shoulder. And as you can see here, we've got possibly another tighter inverse head and shoulder formation here that projects to a move to 12K. Now, whether that is the case remains to be seen, but we had it work recently. Let's see if it works again. We've got RSI at a level of 50 that's about to bounce, but the other indicators not really giving us that sort of signal that we were getting before. What'll probably move it is, of course, the dollar, and the dollar had a breakdown this past week. As you can see, since October, November, the 78.5 level has been major support and major resistance for the U.S. dollar. Why do we care about the U.S. dollar? Because if the dollar goes up, the market goes down. The dollar goes down, the market goes up. Has pretty much been the theme for the last year. We had that, a triple bottom breakdown in the dollar this past week. As you can see, we broke through that 78.30, 78.50 level. And why we want to pay attention to that, this sort of looks like what we saw happen there back in, late October into early November before we got a big bounce. And that coincided with weakness in the market. So again, what I'm thinking is going to happen in the market, we probably get our 12K test, and then we see weakness more than likely coming in after the Fed meeting into February. And we've got the Fed meeting. So we've got a two-day Fed meeting this week. Typically, the market and the dollar has reversed course after the Fed meeting. So let's see what happens on Wednesday here with the market. But we could see a little snapback. One thing we've noticed, SMH, if you see here over the last, essentially the last 3 or 4 days, we've had some selling off on the SMH. And what this action actually mirrors is what we saw back there in November. And you recall in November, the first couple of weeks of November were really, really slow. And we saw a similar sort of sell off after a big move in the SMH. And then we had a nice little bounce, well, over the next several weeks. So probably looking at sort of the same thing here. We'll be keeping an eye on the dollar to see what it does. It's rallied after the last couple of Fed meetings, so we'll see what the dollar does. That's going to determine where the market really moves in the near term. Anyway, as for small cap stocks, I think we're going to see a snapback in a lot of these plays. Russell down quite a bit over the last few days, and time for a little snapback bounce. IKAN, you'll see this chart on a lot of the big movers over the last month. They had a chart like this over the last 3 or 4 days, just a vertical plunge. Time for a bounce. A lot of them have been bouncing off the 50-day moving average. So if you were to place stops here, stops at $1.20, target 20-day exponential 137 to 145 plus is what we're looking on IKAN. Stochastics deeply oversold, and whenever we get a vertical or just a straight down plunge in stochastics, usually there's a pretty nice little bounce that occurs after that. We saw that happen mid-November on IKAN, and we'll be looking for the same thing again here. BCON, this has just been a monster winner for us over the last few days. Volume has been tremendous, and the strength that we've seen in BCON, I have not seen. I've been trading this stock for many, many years. I've not seen this kind of strength in BCON for a couple of years now. It's fighting to hold that 200-day moving average, especially after that dip we saw on Friday, and looking really, really good. If we actually pull out and check out the 1-year chart, next resistance is 37 to 40, so that's our next target on BCON. Again, all we're waiting for is news of that power plant going live, and that likely lights this stock up. So let's see what happens on this one this week. CYBI, this is our exercise equipment play. We got a nice little pop on it early in the week. Actually held up really well over the last couple of days, and on Friday it's holding that 8-day and 20-day exponential 76.77. So we should see that next push higher, especially if small caps do get that bounce this week. RSI flatlined around the 50 level, and stochastics is at a level where it likes to go on a little bounce. And this kind of setup, pop, retrace, and then pop to new highs is what we've been seeing over the last few weeks. Now going into this week, GNVC, one of my favorite setups. Biotech stocks continue to rock the house. Biggest movers have been biotechs over the last few days. And remember, we are entering biotech season. Typically from late January into March, and then May and June, biotechs have their best runs of the year. Reason being, there are many, many, many biotech conferences. And, this is a cyclical move. Biotechs do very, very well this time of the year. GNVC is presenting at the Gene Conference this week in Washington. Last year, this stock popped 50% at the conference. We've got a nice flag set up here on GNVC, and, the next break, if you're looking to add to this stock, a break of 60 cents is where you would look to add to your positions, with stops at the 8-day moving average at 57 cents. And target here, 65, and then let's pull the chart out a bit. Here's the 1-year chart. As you can see, this stock has been beaten down for the last 8 months. We get a break of 67 cents, 65, 67 cents, and we are off to the races on this stock with $80 and $1 targets on it. So, let's see if we get some news here and we get some follow through on this trend now where the stock likes to run this time of the year. Neuro, N-U-R-O, cash-rich biotech stock, trades 30% under its cash, which is one of my favorite ways to play biotech stocks. They've got a lot of cash. They're trading under cash. The company's essentially trading for free. Breakout here is probably 67 cents. And, if we get the right kind of news flow, we could see a definite pop to the 200-day moving average at 90 cents on this one very, very easily. Trading at the bottoms and, just looking for an excuse to run here. And we're about to get a positive MACD cross, which is very, very bullish for this stock. And stochastics, if we scroll down lower, breaking up through 50. Now, the last couple of positive MACD crosses, as you can see, have resulted in, pretty nice moves in the stock. So let's see if we get follow through on that this week. PRKR is now a 50% plus winner for us as a January popper play we picked up back there in middle early December. Actually got a nice little breakout there on this one on Friday, and if the market wasn't acting the way it was, it would be off to the races. But very nice strength throughout the day, very heavy volume over the last couple of days, and we could be looking at this one making a run, a serious run on the 80 cent to $1 range, especially if we get some news flow on it. Just given what the volume has been on this one and the nice little uptrend on all the indicators, looking really, really good here with stops now at 60 cents. WZE Wizard, we got hammered on a partial position here, but it hit our first target, came out with news. You can never, you're not going to know when news is going to come out on the play. But all the way back down to where we initially started this stock a couple of weeks ago, we've got the Mac show, Macworld later this week, and news this weekend that Apple passed 1 billion downloads of its apps. And remember, WZE is a big player in the apps market, so that news is good for it. We've got a nice chart that's held support. We should see a move back, especially with the hype that could be coming with penny stocks, and very few plays for Macworld and the penny world. At least a move back to 30, if not 35 cents on this one over the next few days. RSI held support. Stochastics deeply oversold. ADX is still really strong, and we had a nice volume bounce and stabilization on Friday, which is exactly what we wanted to see after that plunge. Which, by the way, judging by how the market acted, big move up plays over the last couple of weeks saw really big fallbacks over the last couple of days. I mean, another example of that is JSDA, same set of setup. OPWV is another one. Down big over the last couple of days, holding its 200-day moving average. Another one to keep an eye on for a snapback to the 20-day exponential at 229. So, even without that news that we had on WZE, a lot of these high-flying stocks got smacked in the head this last few days. Time for a bounce back, which is what we typically see. Now, a short play to keep an eye on this week is MSHL. Low floats did really, really well over the last couple of days. They typically do when the market gets the way that it did. And again, biotechs were very, very strong. Market cap was still pretty cheap here, but there was no real news flow other than it was a low float stock for this one to run like it did. And check it out, 1, 2, 3-day run up. This is typically when we look to short the play. If not late on Friday, you look to short a pop on the Monday. Target is $1.80 to $2 on this one, and even if you don't trade it, just keep an eye to see how this strategy works. Paper trade it. This is such a low float. There's probably not any shares available to short it, so this is one of those things. This is one of my favorite ways to look for shorts. Big move ups over 3 days. They usually reverse course late day 3 or day 4. So keep an eye on this one for a reversal early this week. So that's pretty much it for the video. Again, my favorite play going into this week is GNVC. And then love the setups that we have in some of the bios and some continuation in BCON. And then, of course, looking for a snapback in these optical plays like IKAN and OPWV. So, one thing to keep in mind as a side note, Allied Irish Banks announced that they're going to get a gain on rebuying some of their debt. So that actually will probably, at least, anything can happen between now and tomorrow, help the euro bounce, which should send the dollar down, which should be market positive. So on that note, have a nice Sunday, and I will see you guys in the chat room tomorrow. Good night.